Why is it that you work your entire life and pay every cent of your taxes while the ultra-wealthy spend millions and the government simply watches? It is a question that likely keeps you awake at night as you look at your retirement accounts. You have followed every rule and you have saved what you could. Yet the feeling of financial uncertainty never quite disappears. You see your paycheck shrinking before it even hits your bank account. You see the price of groceries and fuel rising while your savings stay still. Meanwhile, the elite are playing a completely different game with a different set of rules. They are not smarter than you, but they are operating on a different map. They are using a legal strategy that allows them to access unlimited cash without ever paying a single dollar in income tax. It is hidden in plain sight within the tax code of the United States. It is time to peel back the curtain on this hidden world of wealth. Most of us were raised to believe that debt is a burden we should avoid at all costs. We were taught that being debt-free is the ultimate sign of success. We were told to work hard for a salary and save our money in a bank account. But the reality of the modern economy is that this traditional path is being eroded like sand in the tide. Inflation is a silent thief that eats the value of your hard-earned savings every day. The system is designed to tax you on what you earn every single day of your life. When you receive a paycheck, the government takes their portion before you even see it. When you spend that money, you are taxed again on what you buy. And when you sell an investment to fund your life, they take another significant cut. It feels like you are being taxed on the same dollar 4 or 5 times over. But there is one specific thing the Internal Revenue Service explicitly does not tax. They do not tax borrowed money. Think about that for a moment, because it is the foundation of massive wealth. In the eyes of the law, a loan is not considered income. It is a liability, which means it does not trigger a taxable event. This simple distinction is where the entire financial system opens up for those who own assets. Most people use loans in a way that keeps them poor. They borrow money for a car or a television that loses value every day. They spend years paying it back with money that has already been heavily taxed. The wealthy do the exact opposite. They use their assets as collateral to borrow cash to fund their entire lifestyle. They do not sell their assets because selling creates a tax bill. Instead, they keep their assets and let them grow. Imagine for a moment that you own a portfolio of real estate or stocks worth $5 million. In the old way of thinking, you would sell some of those stocks to pay for your retirement. But selling those stocks means you would owe the government hundreds of thousands of dollars in capital gains tax. You would be shrinking your wealth to pay for your life. The wealthy choose a different path. They go to a bank and ask for a line of credit against those assets. The bank sees your $5 million and happily lends you $1 million at a low interest rate. The Internal Revenue Service sees this transaction and moves on because you have not earned any income. You now have $1 million in cash to spend as you wish, and you owe $0 in taxes. While you are spending that cash, your original assets continue to grow in value in the background. If your portfolio grows by 8% per year, but your loan interest is only 5%, you are still getting richer. You are effectively spending the bank's money while your own wealth compounds and multiplies. This is the core of the strategy often called buy and borrow and die. It sounds aggressive and perhaps even unfair to the average worker who struggles. But it is the way the tax code was written to encourage long-term investment. The government wants people to hold on to assets because it provides a foundation for the entire economy. However, the real magic of this system happens at the very end of the journey. This is where the legacy for your family is truly protected from the tax man. Most people fear that if they die with debt, their children will be left with a heavy burden. In this strategy, the debt is actually a tool for protection and wealth transfer. It relies on a powerful legal mechanism called the step-up in basis. Under current laws, when your heirs inherit your assets, the tax clock resets to 0. If you bought a property for $200,000 many years ago, and it is now worth $2 million, the gain is enormous. Normally, if you sold it during your life, you would lose a massive portion to taxes. But when you pass away, the law pretends your children bought that property for $2 million on that very day. All the profit made during your entire lifetime is wiped clean for tax purposes. Your family can then sell a small portion of that asset to pay off the bank loan you took out. The remaining wealth is theirs to keep completely free of any income tax. They inherit the full value of your hard work without the government taking a cut. This is how the great family dynasties have maintained their status for hundreds of years. They never sell their assets and they never trigger a taxable event. They simply borrow against their growth and let the law handle the rest of the work. For many retirees, this sounds like a dream that is only available to the ultra-rich. But the mechanics of this strategy can be applied on a smaller scale if you are prepared. It requires you to move your focus away from earning a high salary. Instead, you must focus on owning things that increase in value over time. This could be a modest home with significant equity, or a diversified portfolio of index funds. The key is to treat your wealth as a fountain rather than a bucket of cash. A bucket of cash eventually runs dry, but A fountain of assets can provide for you forever. However, we must discuss the risks because this strategy is not a magic wand. Borrowing against your future requires extreme discipline and a very clear mind. We are currently living in an era of fluctuating and uncertain interest rates. If the cost of your loan becomes higher than the growth of your assets, you are slowly losing money. There is also the constant risk of a market crash or a housing downturn. If your assets drop significantly in value, the bank may demand their money back immediately. This is known as a margin call, and it has ruined many investors who are too greedy. To stay safe, the most successful people never borrow more than they can truly handle. They do not try to live like kings on a small portfolio. A conservative rule of thumb is to never let your debt exceed 25% of your total asset value. This provides a massive buffer to survive any economic storm that may come. The strategy is about long-term patience and building a legacy, not short-term greed. Many people hear this information and feel a sense of anger at the way the system is built. They feel that the game is rigged against the honest person who works for a living. And while the frustration is understandable, it does not change the reality of the rules. The tax code is a map of what the government wants you to do with your money. They want you to invest in the economy, and they want you to own assets. By understanding these rules, you can start to position yourself on the right side of the fence. You can stop being the person who is always being taxed and start being the owner of the system. It starts with a fundamental change in your daily psychology and your view of wealth. Instead of asking how you can get a small raise at work, you should ask how you can own more assets. Can you invest in a small business, or can you pay down the debt on your home to build equity? Every dollar you move from temporary consumption into an appreciating asset is a step toward freedom. Financial independence is not about having a huge pile of cash in a checking account that loses value. It is about having a system that provides for your needs regardless of whether you work. It is about knowing that your family will be secure and comfortable long after you are gone. The wealthy are not necessarily smarter or more talented than the rest of us. They have simply been taught a different playbook from a very young age. They understand that earned income is the most expensive way to live your life. Assets and strategic debt are the cheapest ways to build a life of true liberty. The information you need is now in your hands. You do not need to be a billionaire to start thinking like an asset owner. You simply need to decide that you are done playing the game by the old and broken rules. The path to a secure retirement is not found in a bigger paycheck or a longer work week. It is found in the ownership of things that grow while you are asleep. It is about letting time and compounding do the heavy lifting for you. Take the time today to look at your finances through this new and clearer lens. Ask yourself how much of your wealth is actually working for you right now. If the answer is not enough, then today is the day to change your entire strategy. You have the power to protect your future and the future of your children. The rules of the game have been revealed and the curtain has been pulled back. Now it is your turn to make the move and take control. Thank you for watching and for taking control of your financial destiny. We will continue to break down these hidden and powerful systems every single week. Make sure you are subscribed so you never miss a lesson in true wealth building. I will see you in the next one.